Imagine this, waking up without the alarm clock buzzing. No boss, no commute, no worries about bills. That's the dream of financial freedom. It's about having choices. You control your time and your money. But for many, it feels out of reach, like some far-off fantasy. The truth is, it's possible for anyone, even if you're starting from scratch. Financial freedom starts with a single step. It's about understanding your money. It's about making smart choices today to build a better tomorrow. This isn't about getting rich quick. It's about building a solid foundation for a secure future. A future where you are in control. Most of us are stuck in the rat race, trading our time for money, living paycheck to paycheck. It's a cycle that can feel impossible to break. But imagine a life where you don't have to stress about money, where you can pursue your passions, spend time with loved ones, and retire on your own terms. That's the power of financial freedom. It's not just about having more money, it's about having more options, more freedom, and more peace of mind. It's about breaking free from the chains of debt and financial worry. It's about designing a life you love on your own terms. The first step to financial freedom is taking control. Taking control of your finances, your habits, and your future. It starts with a decision. You decide to stop dreaming and start doing. You decide to take charge of your money. You decide to invest in your future. This guide will give you the tools and knowledge to get started. We'll cover everything from budgeting and saving to investing and building wealth. It's time to rewrite your story. It's time to take control and build the life you deserve. It's time to start your journey to financial freedom. Before you start investing, you need to know what you're aiming for. What are your financial goals? What do you want your money to do for you? Are you saving for a down payment on a house? Do you dream of early retirement? Or maybe you want to travel the world? These are your long-term goals. They might seem far off, but they're what will keep you motivated. They're the big picture, the driving force behind your financial plan. But don't forget about short-term goals too. Things like paying off debt, building an emergency fund, or saving for a vacation. These smaller goals keep you on track and give you a sense of accomplishment along the way. Every step you take, big or small, brings you closer to financial freedom. Knowing your risk appetite is a crucial part of investing. Investing always involves some level of risk. But how much risk are you comfortable taking? That's your risk tolerance, and it's different for everyone. Some people are comfortable with high-risk investments that offer the potential for high rewards. Others prefer a more conservative approach with lower risk and lower potential returns. Your risk tolerance depends on your age, your financial situation, and your personal comfort level. There's no right or wrong answer. Another important factor is your time horizon. This is how long you plan to invest your money. If you're investing for retirement decades from now, you have a longer time horizon and can afford to take on more risk. But if you're saving for a down payment in a few years, you'll need a more conservative approach. Building your financial roadmap is like planning a journey. Think of your financial plan as a roadmap. It guides you towards your destination, financial freedom. And just like any good roadmap, it starts with a clear budget. A budget isn't about restricting yourself. It's about taking control of your money and making it work for you. Start by tracking your income and expenses. Where does your money go each month? Once you have a clear picture, you can identify areas to cut back and start saving. Aim to save at least 15% of your income for retirement and other long-term goals. It might seem like a lot, but remember, even small amounts add up over time. With a solid budget and a savings plan in place, you're ready to start building your financial future. You're ready to start investing. The magic of compound growth can transform your financial future. Compound interest is like magic. It's earning interest on your interest. Imagine you invest $1,000 and earn a 10% return. Now you have $1,100. In the second year, you earn 10% on $1,100. Year after year, your money grows faster. It's like a snowball gaining momentum. Start early to maximize growth. Time, your greatest asset. When it comes to investing, time is your greatest ally. The earlier you start, the more time your money has to grow. Let's say you start investing $100 a month at age 25. With an average return of 7%, you'd have over $1 million by age 65. But if you wait until you're 35 to start, you'd need to invest almost twice as much each month to reach the same goal. That's the power of time. The earlier you start, the less you have to invest to achieve your financial goals. Don't let procrastination rob you of your financial future. Even if you're starting later in life, it's never too late to begin investing. Every dollar you invest is a step towards a more secure future. Reinvesting your earnings is like adding fuel to the fire of compound growth. When you reinvest, you're essentially buying more of the investment, which generates even more earnings. Let's say you invest in a stock that pays dividends. Instead of spending the dividends, you reinvest them back into the stock. Now you own more shares, which means you'll receive even more dividends in the future. This cycle of reinvesting continues, accelerating your returns and helping you reach your financial goals faster. It's the snowball effect on steroids. Reinvesting is especially powerful with dividend-paying stocks and mutual funds. But even if your investments don't pay dividends, you can still benefit from reinvesting by using your returns to purchase more of the investment. You've heard the saying, "Don't put all your eggs in one basket." It's wise advice, especially when it comes to investing. Diversification is key to managing risk and building a solid financial portfolio. Think of it like this. If you invest all your money in a single stock and that company goes bankrupt, you could lose everything. But if you spread your investments across different asset classes, you're less likely to be wiped out by a single event. Diversification is about not putting all your faith in one company, one industry, or even one type of investment. It's about spreading your risk to minimize potential losses. Remember, different asset classes perform differently in various market conditions. When one investment is down, another might be up. This balance helps protect your portfolio from major swings and smooths out your returns over time. The world of investing offers a diverse range of asset classes, each with its own risk and reward profile. Let's explore some of the most common ones. Stocks represent ownership in a company, offering the potential for high growth but also coming with higher volatility. Bonds are considered less risky than stocks. They are essentially loans to governments or corporations that pay regular interest payments. Investing in real estate can provide rental income and potential appreciation, but it also requires significant capital and comes with liquidity risks. Gold is often seen as a safe haven asset, tending to hold its value during economic uncertainty but doesn't generate income. These are just a few examples, and within each asset class you'll find various subcategories and investment options. The key is to choose a mix of investments that align with your risk tolerance, time horizon, and financial goals. You don't need to be a financial expert to build a diversified portfolio. Index funds and exchange-traded funds, or ETFs, offer a simple and cost-effective way to invest in a basket of assets with a single purchase. Index funds track a specific market index such as the S&P 500, which represents the performance of 500 large companies. ETFs, on the other hand, can track various assets, including stocks, bonds, commodities, or even specific sectors. The beauty of index funds and ETFs is that they provide instant diversification. Instead of buying individual stocks or bonds, you're buying a small piece of hundreds or even thousands of assets. This broad exposure helps reduce risk and provides a more stable investment experience. Let's explore the various investment vehicles available to you. The investment world can seem like a jungle, but we'll guide you through it. One common investment vehicle is a mutual fund. It's a basket of stocks, bonds, or other assets managed by a professional. Another option is an exchange-traded fund, or ETF. ETFs hold a basket of assets and trade on stock exchanges. Individual stocks offer high rewards but come with higher risks. Section 2. Understanding your options. Each investment vehicle comes with its own set of characteristics, risks, and potential rewards. It's crucial to understand these factors before making any investment decisions. Mutual funds offer diversification and professional management but typically charge annual fees. ETFs also provide diversification and tend to have lower expense ratios. Individual stocks offer the potential for higher returns but also carry a higher risk. Your choice will depend on your risk tolerance, time horizon, and goals. Section 3. Seeking expert guidance. Navigating the investment world can be daunting, especially for beginners. Don't hesitate to seek guidance from a qualified financial advisor. A financial advisor can help you assess your financial situation, define your investment goals, and create a personalized investment plan tailored to your needs. They can also provide valuable insights into different investment options and help you make informed decisions. When choosing a financial advisor, look for someone who is trustworthy, experienced, and holds the necessary licenses and certifications. It's also essential to understand how they get paid. Fee-only advisors charge a fee for their services, while commission-based advisors earn commissions on the products they sell. Remember, investing is a journey, not a sprint. It's about making informed decisions, staying disciplined, and seeking professional guidance when needed. By following these steps, you'll be well on your way to building a brighter financial future. Section 1. Stay the course. Investing is a marathon, not a sprint. It's about making consistent contributions over time and letting the power of compounding work its magic. Don't get sidetracked by market ups and downs or tempted to chase quick profits. Remember the roadmap we talked about? Stick to your financial plan, even when things get tough. The market will fluctuate, but your long-term goals shouldn't. It's easy to get caught up in the hype of a bull market, but remember, what goes up can also come down. Don't panic and sell your investments when the market takes a dip. Stay calm, stay focused, and stay the course. Remember, time is your greatest asset. The longer you stay invested, the more time your money has to grow. Don't let short-term market fluctuations derail your long-term financial goals. While it's essential to stay the course, it's equally important to monitor your investments and make adjustments as needed. Life changes, and so should your investment strategy. Review your portfolio at least once a year, or whenever there's a significant change in your financial situation. Are your investments still aligned with your goals, risk tolerance, and time horizon? If you're approaching retirement, you might want to adjust your asset allocation to become more conservative. If you're younger and have a longer time horizon, you might be able to take on more risk. Don't be afraid to rebalance your portfolio if necessary. This means selling some investments that have performed well and buying more of those that have lagged. Rebalancing helps you maintain your desired asset allocation and manage risk. The journey to financial freedom is a marathon, not a sprint, so it's crucial to acknowledge your progress and celebrate your achievements along the way. Every milestone, no matter how small, deserves recognition. Did you reach your savings goal for the month? Did you finally pay off that credit card debt? Take the time to celebrate these victories. Rewarding yourself for your financial discipline helps reinforce positive habits and keeps you motivated on your journey. Treat yourself to something you enjoy, but keep it within your budget, of course. Remember, financial freedom is not just about the destination, it's also about enjoying the journey. Take the time to appreciate how far you've come and savor the feeling of being in control of your financial future. We've covered a lot of ground, folks, from defining financial freedom to understanding compound interest. The most important step is the first one. You don't need a huge chunk of money to start. Small amounts invested regularly can snowball into significant wealth. Financial freedom is a journey, not a destination. Imagine waking up every morning without the dread of debt hanging over your head. Imagine having the freedom to pursue your passions, spend time with loved ones, and give back to your community without worrying about money. That's the power of financial freedom. It's about taking control of your finances so that money is no longer a source of stress, but a tool that empowers you to live life on your own terms. It's about breaking free from the paycheck-to-paycheck cycle and designing a life you love. And the best part is, financial freedom is attainable for anyone willing to put in the effort. It's not about hitting the lottery or inheriting a fortune. It's about making smart choices, being disciplined, and staying committed to your goals. You have the power to change your financial future. You have the power to break free from debt, build wealth, and achieve financial freedom. It all starts with a single step. Don't let fear, procrastination, or lack of knowledge hold you back. Start small, stay consistent, and never stop learning. Educate yourself about personal finance, explore different investment options, and seek guidance from trusted professionals when needed. Remember, knowledge is power. And in the world of finance, it's the key to unlocking your full potential. Your financial future is in your hands. Take control, make smart choices, and watch your dreams become a reality. Start your journey to financial freedom today. If you found this guide helpful, please like, share, and subscribe to our channel for more tips on achieving financial success.